Good afternoon, everyone. Sorry about the late start. We had a little bit of technical difficulties with the YouTube live stream, but we are here and we are excited to have you all here today. So, my special guest is Chris Dudenheffer from Atlantic Coast Mortgage. And Chris, did I say your name right? Because I normally jack that up.
Absolutely. It's pronounced exactly how it's spelled.
Awesome, awesome. Chris is one of my favorite lenders. He is so knowledgeable and he's here to serve. And that's what we're all about. We're all about service to the community, to our clients. And we're so glad you could be here to get educated today about mortgage refinancing strategies, especially right now with the economy. The interest rates keep going up. You don't know when they're going to start going down. However, we're just happy to have you all here. And again, I'm Simone Isaac with Long and Foster Real Estate, and my special guest is Chris Dudenheffer from Atlantic Coast Mortgage. So, welcome everyone, and thank you for tuning in. Chris, you want to go ahead and take it over?
Absolutely. Hi, everyone. My name is Chris Dudenheffer. I'm from Atlantic Coast Mortgage. I help home buyers secure financing to purchase a home. I also help homeowners secure financing to refinance their home if it's right for them. So Simone has asked me to talk about refinancing and the refinancing process and to help everyone to understand maybe when the best time to refinance is and some tips and tricks to accomplishing that. So I'm going to go ahead and share my screen here. So here's my contact info, mine and Simone's contact info on the screen. If you guys have any questions, any follow-up questions after you watch this, feel free to email me or shoot me a text message. It's always easy to get me by text message. We're going to talk today about mastering mortgage refinancing strategies. Topics we're going to cover, we're going to talk about, there's two basic types of refinances. We're going to talk about how to identify the best time to refinance a loan. I'm going to talk a little bit about appraisals for refinances, and then the cost for refinancing. Okay, so the first type of refinance we're going to talk about is a rate term refinance. This is when most people think about refinancing their mortgage, this is what they're thinking about. It's a basic restructuring of the current loan that you have. So you take it and all you do is change either the term, which would be the number of years that are left on it, or the interest rate, or both, something like that, to change the overall nature of the loan. So some reasons that people will do a rate term or a standard traditional refinance is so that they can lower their interest rate, they can change the length of their loan, get rid of mortgage insurance on their current loan, or lower the monthly payment. There are a couple of different ways to do this, and a lot of that is depending on the current type of mortgage that you have. So if you have a conventional loan, there's a specific way to do it. If you have an FHA loan, most of the time when people get FHA loans, the FHA loan is not typically a loan that you would keep forever, right? That you would keep for 30 years and pay off at the end. Typically, FHA loans will get refinanced within the first couple of years of having them. And they have their mortgage insurance is permanent. So you don't get rid of the mortgage insurance on an FHA loan by paying down the balance of the loan. It has to be refinanced in order to get rid of the mortgage insurance. The VA refinances, so the rate term refinance on a VA is called an interest rate reduction refinance. This loan is very, very easy to do. It's what we call a streamline refinance, where you don't typically have to provide any paperwork for that refinance. So if you have a VA loan, happy to discuss that in further detail. Not really what I was planning on doing in this, but they're excellent opportunities as well. And then a USDA loan, if you have a USDA loan, they're easily refinanced. Most people convert a USDA loan into a conventional loan during a refinance as well. A refinance, a rate term refinance can go up to 95 to, depending on the loan program, 100% of the value of the home. That means that if you, like, let's say your house is worth $100,000, you can refinance up to 95, somewhere between 95 and $100,000 on that mortgage. It's not typical that you'll find a loan program that'll allow you to go over 100%. Rate term refinances do not always require appraisals. We'll talk about appraisals a little bit longer, but there are times where you can get around doing an appraisal on a rate term refinance.
Now, Chris, how does this work with investment properties? So if I'm an investor, can I use this rate term refinance for some of my investment properties?
Absolutely. Yeah. In fact, most of the time when people have investment properties and they go to refinance it, unless they're trying to take money out to do something else with investing, generally they'll just do a rate term refinance. And you typically want to wait until the interest rates are low enough that it makes financial sense to do it. But yes, absolutely. I own 7 rental properties and I have refinanced every single one of them. And it reduces just this, the purpose is to reduce your monthly payment. So yes.
Great. Now, is it a certain type of property? Like, um, if it's a duplex, can we do it for a duplex? Is there a limit on what we can use this for as far as the property type?
No, property type does not have an impact. It's always an option to refinance an investment property. Again, it's just about like making sure that it's the right decision. So like
Okay,
that the monthly payment will reduce enough that it makes sense to do the refinance.
great.
Okay. Okay, so the next type of refinance is called a cash out refinance. So this is the refinance that you do if you're looking to get cash out of your house, out of the equity in your current home to use for uh, home renovations or paying off debt or something like that. So typically when people do a cash out refinance, they do it for home renovations, paying off debt, paying off medical expenses. Um, I did one for a guy who wanted to buy a boat. It just depends on what you're looking to do and what you need the money for. But it's about accessing that equity, and then typically these refinances are done. So it's the benefit of doing that versus using, like, for example, a credit card or getting an auto loan on that car that you want to buy, is that the interest rates are typically much better for the with the mortgages. So if you look over on the right hand side of the screen, the way that the balance is figured out, the new balance of the mortgage is that you take the old balance and then you add onto it the amount of money that you take out, which creates the new balance of the loan. These can be done with conventional FHA, VA, and USDA loans. You can't go quite as high on a cash out refinance as you can with a rate term refinance or a traditional refinance. So usually you're capped out at about 80%. So if let's say that you owe 95% of the value of your home on your current mortgage, it's going to be challenging to refinance that loan and take money out. First of all, because there's not enough equity, but second of all, because that opportunity just isn't available in the marketplace. So typically, this sort of refinance is for somebody who owes like 60% of the value of the home, 65% of the value of the home. They're looking to get 15% out. Okay. And then cash out refinances always require an appraisal. So there's no scenario where you're going to be able to do a cash out refinance. There would be absolutely no appraisal required. These are fantastic opportunities too for the right person, right? For the right situation. It has to be the right situation. It has to make sense. And that's one of the things that I specialize in, is making sure that this makes sense. This is the right move for you. Okay. Questions about that? Anyone?
I don't see any questions in the chat, so we can keep moving along.
Okay. All right. So how do you determine when it's the right time to refinance? So a couple of different opportunities that exist for refinancing. And obviously this is not like the full extent. I can't cover every scenario that's ever existed in the world, but just some ideas. So when market conditions make it beneficial. So interest rates change every day, sometimes multiple times every day. Sometimes interest rates organically drop, creating fair conditions to lower your mortgage payment. So the purpose of refinancing your home is not typically to lower your interest rate. It's typically to lower your monthly payment. There are times when someone will present refinance. I've had clients who've come to me and said, "Hey, I'm talking to another loan officer, and he wants me to refinance my home, and the interest rate is lower, but the mortgage payment is higher or the same as what my current mortgage payment is." And there's dig deep and explain to you there are a handful of reasons that this would occur. That's one of the things that I take a look at. I want to make sure that it makes financial sense for you to do this. We're not just looking to lower the interest rate. We actually want to lower the monthly payment. If it doesn't save you money every month, that new interest rate is absolutely not beneficial to you. So when you paid the balance down far enough to save money. So we talked a little bit earlier about, for example, mortgage insurance, right? So if we can drop the mortgage insurance off of your loan. So if you put 10% down on your mortgage and the interest rates are lower and we look at the refinance, we can drop the mortgage insurance, we can reduce your interest rate. Overall, your total monthly payment is going to go down significantly. So once you pay that balance down, it's something that you want to look at, particularly when it comes to interest rates and mortgage insurance. And then also when you need it. So if you need cash out, if you're getting a divorce sometimes. So another thing that happens or you have the opportunity to do when you refinance is change the title to the property. So a lot of times when people are getting divorced, one of the family members, and I hope that that never happens to anybody that we're not talking to right now, but the unfortunate reality is that it does happen sometimes. So most of the time you want one of the spouses wants to take their name off of the mortgage, get that off of their credit, or get the other person off of the title to the property or something like that. All those opportunities exist when we're refinancing. Also, when people retire. So sometimes when people retire, they want to either take cash out or they want to reduce that mortgage payment. They're going to end up on a fixed income, Social Security income, or a pension, and they want to reduce that monthly payment as far as they can. Retirement is a really great opportunity to do this, and I think this is a good time to mention as well. We also do what are called reverse mortgages. So if you're in a situation where you've reached a certain age, you're looking to retire, reverse mortgages can sometimes be a really fantastic opportunity for you. I'm happy to talk to anybody about that. Not the purpose of this meeting.
We do have a question in the chat for you, Chris. So the question is from Billy. He says, so with a divorce, will that raise my interest rate if I have 3.5%? Currently, that's his interest rate with the refinance, if he refinances.
So when you refinance, you have to go with the market rate. So just because you have a current 3.5% interest rate, if you refinance the loan, you're going to end up going with what the market rate on mortgages is. So yes, typically that would increase your interest rate. Yeah.
So for him, it would probably be better for him to go through just getting it retitled.
As long as your spouse is not on the mortgage, because if you retitle it
Mhm.
and the other spouse is on the mortgage company is going to have a problem with both parties that they have lent money to, because no matter what, you can't take somebody off of the mortgage without refinancing it. So if your spouse is on the current loan, you don't want to just retitle your property without refinancing. That could create that there's all sorts of problems written into your deed that can create for you. And obviously, the worst case scenario is that the mortgage company calls the note. So you want to be very careful with just changing the title to your property.
Okay, so one more question. So if the spouse is not on the mortgage, just on the deed, how does that work? Will it be affected, or is it okay just to go ahead and get that deed updated with only the other spouse?
Yep, perfectly fine. Go ahead and do
Okay,
that. Absolutely. Yes.
great.
Yep, that's the best. I mean, in a bad situation, right? I don't want to use the term best case scenario about divorce, but in a bad situation, that is the ideal situation, is that you don't have to, especially with what you have, Billy. If you have a 3.5% interest rate, I don't know if we'll ever end up with a 3.5 interest rate available again. You don't want to lose that just because of this unfortunate situation that's happened. Yes, go ahead. Want to reach out to a title company? I know a bunch. I'm sure that Simone knows some that she can refer you to. Be happy to get you in touch with the right people to do that. It's actually a very simple process, and I would be surprised if it cost you more than $100.
All right. That's all we have right now for questions in the chat. So please continue.
Okay. Okay, refinancing and appraisals. Let's talk about some appraisal stuff. So appraisals are not always required on refinance, but every loan is different. So there are scenarios where people just all do not, a loan qualifies for a complete appraisal waiver. So you do not have to do an appraisal. And I find that a lot with refinances. The reason that you get an appraisal waiver is because the way that the mortgage appears, or the way that the mortgage, the application is so incredibly favorable, right? The risk level is super low that that the appraisal is not a necessary part of the mortgage transaction. So that would be in the example, you have really fantastic credit and your like the balance of your loan is paid down far enough that you owe less than, let's say, 80%, 75% of the value of your home. Typically those are like really standard, easy, appraisal. And that's the same for purchases. So you can qualify for an appraisal waiver when you're purchasing a home if you have a large enough down payment. And I see that very common. It's very common. So Simone had asked me about appraisal. If you are refinancing a house, can you use the appraisal from the purchase? You can if you're refinancing and the appraisal from the purchase is less than 60 days old. So this is not common. Very, very, very uncommon that somebody would refinance their house within 60 days of purchasing. But appraisals have a like a timeline of, they're only valuable. They're typically, the appraisal is a snapshot of what your house is worth right now, right? And that's it. This is not a what your house is permanently worth. Market conditions change, all kinds of stuff changes, neighborhoods change. And so we want to make sure that we have a current value of your home. So if you're refinancing, if you have an appraisal that's less than 60 days old, yes, that could be used, but 99.99% of the time, you'll just have to get a new appraisal if you don't qualify for an appraisal waiver. So that's what I put here. Appraisals help determine the value of the property and ultimately how much you can borrow against the home. So we talked earlier about different types of loan programs and how much of the value of the home the new loan can go up to when refinancing, particularly with a cash out refinance. That is one of the tools that we use to determine how much money or how much you can borrow against your house. In the unfortunate scenario when property values decline, which does happen, it's part of a normal market, it makes this a much more challenging part of the refinance, but we haven't been in that in many, many, many years. So hopefully we never end up there, right? Okay, all right. Questions on appraisals, anyone? And we'll have time for questions at the end. If you guys have questions, just throw them in the chat. I'll pick it up at the end. Okay, closing costs for refinances. So let's talk about this. So you guys are going to see people advertise no cost refinances, right? The hard reality is that there are costs to refinance, right? So a mortgage company, for example, has costs. They put in time, they whatever it is that they have to put into it, there are costs to refinance your home. There are ways to offset the costs of refinancing though. And so that was what I wanted to talk about first of all here. So typically closing costs on a refinance are included in the new loan amount. So it results in no money out of pocket for the borrower. So that is extremely beneficial. So just because there are costs involved in the transaction, and just because you have a lender that tells you that there are no costs involved in the transaction, does not mean that that's accurate. There are costs involved in the transaction, but there are ways to work it so the impact on the borrower is minimal or nil. Okay. I also wanted to talk about escrow holdbacks. So an escrow holdback is the amount of money that is currently in your escrow account. So not to be too basic here, but let me just explain this for just a second. When you make your monthly mortgage payment, there are actually 4 or 5 different items that you are paying all in the exact same payment. Okay, so those items are in order: your principal and your interest, right? So just like a car note, when you make your monthly payment, you pay your principal and your interest every month. Those are the first 2 items on a mortgage. The third item is your property taxes. So every year the county charges you taxes on your property. You don't pay those taxes out of pocket. You pay those taxes every month in your mortgage payment. And that portion of your mortgage payment goes and sits in a savings account that we call an escrow account. So an escrow account and a savings account are similar. Okay, it just sits in that account until that tax bill is due. Without you being involved in the process at all, the county will send the tax bill to the mortgage company. The mortgage company will receive it, and out of the escrow account or savings account where that money is stored, the county will get paid those taxes. It's the same thing with your homeowner's insurance, which is the fourth item on the list. So your homeowner's insurance is paid right through the exact same escrow account, the exact same process. Homeowner's insurance company will send the bill to the mortgage company without you being involved in this process at all. And if you're not paying attention to it, you won't even know that this has happened, which is fine. You're exactly the same as 95% of the other people in this world. But that homeowner's insurance bill gets paid right from your escrow account. And then the fifth item that not everybody pays, but a lot of people pay, is the mortgage insurance that we've been talking about. Mortgage insurance is insurance that goes to protect the lender that you pay on any property, regardless of what your lender may have said. Any mortgage that has less than 20% down has mortgage insurance in some fashion or another. So your escrow holdback is the money that sits in your escrow account until that balance is paid. So if your tax bill is due in 2 months and it's been 10 months since the last time it's due, there's typically a lot of money in that account. Depending on the value of your home, there could be thousands of dollars that just sit in that account that you don't even know is there. When you refinance your mortgage, your old mortgage is paid off in full and that escrow account is closed. And then a new escrow account is established. So when people think about closing costs, like 60% of what you would consider to be closing costs is really just this escrow, your taxes and your homeowner's insurance. They get paid right into that account, and that account has to get funded up front. So when we do a refinance, a couple of weeks after the refinance is finalized, you'll get a check from your old mortgage company for the total amount of your what we call escrow holdback, or the amount of money that is sitting inside your escrow account. But the tax bill still has to get paid. So a lot of times we'll increase the balance of the new loan so that you're not out of pocket any money. We'll increase the balance of the new loan a little bit to cover those, that amount of money that you inevitably have to pay to the county, right? There's no way around paying taxes. It ain't gonna happen. Well, you're probably not going to be able to get around paying taxes if you're required to pay them. So that amount of money will end up in your lap a few weeks, typically 2 or 3 weeks after the refinance is closed, and then the new escrow account is open. Feel free to, if you don't like the fact that the balance of your loan increased, 2 ways to handle that. You could just pay that money out of pocket, which most people don't want to do, but you could just bring the $4,000 in your escrow account, you bring that to closing, and then wait till the check comes, which it will guaranteed come. They're required by law to give that money back to you. It's not something that you can't get ripped off with this. So you can do that, or you can just take the balance of the escrow holdback and pay it as an additional payment to your mortgage when your first or second mortgage payment is due. And that's both of those work pretty much the exact same. There are title fees associated with a refinance. Typically, the title company will charge significantly less. You don't have like title insurance and stuff like that is not typically part of a refinance. It's usually a purchase fee. Lender fees, and I try and keep these minimal, if not nil, particularly now, because all the loans that I'm doing right now for purchases, they're all going to get refinanced. Nobody's going to keep the loans that we have. Eventually the interest rates will go down. Hopefully it's down in 6 months. It might not be for a couple of years. I don't have a crystal ball. I don't know exactly, but they'll all get refinanced. So I'm happy to do that for you with no lender fees, but I don't have any control over the title company fees. I don't have any control over your taxes or your homeowner's insurance. All that stuff has to get set up correctly and has to get paid. So I'm happy to help you work with a title company that I know a couple that will do these for very, very minimal. Happy to help you work with that as well. Did we get a new question, Simone?
I do have a couple questions, but I can hold them to the end. I've just been annotating them, so we can at the end go ahead and ask those.
Okay, sure. All right. So let's go on. Let's move on then. Yeah, guys, feel free. Just keep throwing questions into the chat box. And again, afterwards, if you have questions, I'll put my cell number and my email address up on the screen. Feel free to shoot me a text or an email. I'm happy to work with or talk to whoever has questions about this kind of stuff. Okay, so right now, for people who are interested in purchasing a home, so I get a lot of people that I talk to who are nervous about the interest rates. What I tell people is to marry the house and date the rate, right? You're committed to that home, but you're not committed to that interest rate. You don't have to keep that interest rate. There is a way out of that interest rate, and you can keep that house. You can keep that thing that you love, that you want to keep with, that you want to stay with, and let's see if we can reduce that monthly mortgage payment. So don't, if you're looking at purchasing right now, don't be scared away by the interest rates. The one thing that you have to remember is that even though the interest rates are a little bit high right now, traditionally a little bit high, um, when the interest rates go back down, prices are going to go up. So if you can buy right now, and I hate to say, I know that over the last years we've seen pretty significant price increases, recognize that the prices are still what you would consider to be high, even with the interest rates high. When the interest rates go down, those prices are going to skyrocket again. So don't shy away. So here's what I'm going to say is that the prices are actually low right now because the interest rates are high. Secure the home with a lower price, and then we can refinance the loan whenever. We can refinance the loan down the road, and then you have the house that you want with the payment that you want. So don't don't let that scare you away. Don't let that push you away. Okay, so I'm ready for questions. So what do we have, Simone?
All right. So I do have two questions. The first question is, are surveys required on a refinance?
Surveys are not required typically ever on a mortgage. So no, surveys are not required. They're 99% of the time survey is completely optional. You can do a survey, but no, absolutely not. You don't need a survey.
Okay, and then the next question is, you were talking about the no-cost refinancing, the mortgage companies advertising those. So a question came up as to how are they able to actually advertise no-cost refinancing if there is essentially a cost involved in it?
Um, so I guess what's the best way to say this without sounding like like it. There are people who have shady business practices. Just because something is unethical doesn't always make it illegal, right? So you can get away with something if you fly under the radar. So if they're not producing enough business to advertise stuff like that and get caught by the government or get reported, they'll be able to get away with it. There are also advertising tricks that make, and I don't know if I have like the full expertise on the marketing side of it to be able to go into great detail, but there are people that just find ways around it, right? The way that they word it is one way or another. For me, I would advertise it as a no cost refinance because I'm not charging you anything, right? So like, but just because my company doesn't charge you anything doesn't mean that there aren't costs associated that are third party fees, right? The appraisal is actually a third party fee. So even though you pay the appraisal fee to the mortgage company, that is still a fee that you're paying to the appraiser, and we're not legally allowed to increase the amount that the appraiser charges and charge it to you so that we can make more money off of that. So that's not legal, even though I'm sure it probably does happen. I should definitely do not do it, but it's the invoiced amount. So appraisals, title fees, you know, I can do the loan and call it a no cost refinance because I'm not charging you anything, even though the title company, you still have to find a title company to do the loan. So I guess that's the best answer that I have is either they're being shady about it or I don't know the answer. I'm sorry. Wish I had a
No, but,
better
but,
answer.
but that's a great point because I think you gave a great example is that you can call it a no cost refinance because you're not charging any cost as the lender. So it's all about the marketing and how you advertise it. So what people really need to understand and really need to know is that there are going to be costs associated with the refinance. It just may vary what those costs are because like you said, the titling, you're going to have to pay for the titling. You're going to have to pay for some other costs that we saw in your presentation. but just they have to be careful about how things are worded and ask the questions. Okay, you say no cost refinance. What are the other costs that I'm going to have to pay? So what is it that's not costing me anything? Because something, just keep in mind, something you're going to have to pay for in that refinance. So that's I think that's a great point that you made on how the marketing comes across. It's like that hook to get us to open that envelope and see, ooh, no cost. Great. I don't have to pay anything, but yeah, you're gonna have to pay something.
Sometimes they'll put it in the fine print, and I personally hate reading the fine print. I feel like I'm reading a legal document, right? I think that they
Yeah,
intentionally make it insanely boring, but sometimes that stuff will get put in the fine print. I see that a lot on like like websites for banks that are advertising interest rates. Because a bank, I mean, they're going to obey the law, right? But they're going to do everything that they can to advertise what they have as well. In the fine print, they typically will include loads of fees. I find this a lot on purchases, but they'll include loads of fees in the fine print that they just don't have to present where at the same location that they present the interest rate because they're not legally required to. And could you imagine having to write a law that explained where on a website you had to put, you know what I mean? So
right.
there's all these loopholes that as an investor, as a buyer, you want to be educated about, and you want to work with somebody that you trust, right? That you're confident is gonna take care of you. So yeah, the fine print is a good place to go to figure out, is there more to this? But there are unfortunately people out there who have deceptive business practices as well, and it's what it is.
And that's why we're here. We're here to educate and give people actual information because we want you to be in the know. We don't want you to be out there and then get caught up in a transaction or get caught up in a mortgage that you really didn't read the fine print for, and now you're out of pocket a lot of money. So I want to thank you, Chris, for being here today and actually explaining all of this to us about mortgage refinancing and helping us to understand like what is available to us, what strategies there are out there for buyers, current homeowners, and also our investors. So let me just check the chat one more time. Just want to make sure we don't have any other questions because we definitely don't want to leave anything unanswered. That's what we're here for. So it looks like we don't have anything else in the chat. So unless anyone else has any questions, the information you see up there is the information for Chris, how you can reach him, and also how you can reach me. What I will tell you, I had a little difficulty this morning, a little technical difficulty trying to get onto my YouTube channel's live stream. So what we're going to do is we have recorded this actual Zoom, and we're going to put it out on YouTube for you. So be checking for that. Hopefully, we'll get it out there no later than sometime tomorrow, but you'll be able to go back and replay this. And if you have any questions, feel free. Don't hesitate to contact Chris or myself. We're here to serve you and to help. Chris, again, thank you so much. You're my guy when it comes to mortgages. And I love your service heart, that you have a heart for service. So thank you so much for being here. I look forward to doing something else with you in the future. We're going to let the people know about that. All right, everyone. Thank you so much for being here. You have a wonderful weekend. Be safe. Live life to the fullest. Have a good day.